Today we're covering a critical decision for business owners who are also employees of their own company. Whether it's better to transfer your car into your business as an asset or to keep it in personal ownership. Whether you're running an LLC, a corporation or AG, or a sole proprietorship, making the right decision about your car can impact your finances and tax obligations. Let's get into it. First things first, if you're the owner of an LLC or AG, there is a very important distinction to keep in mind. That is, that you and the company are two separate legal entities. Unlike a sole proprietorship where you and the company are legally the same, LLCs and AGs allow you to transfer personal assets like a vehicle into the business. But is that always the best option? Let's talk about the two main scenarios you'll face as a company owner. Using your private car for business purposes or transferring it into your business assets. Both options come with their own benefits and tax implications. If you transfer your car into your business, it becomes a company asset. This means that any costs associated with it, like maintenance, fuel, or insurance, are tax-deductible business expenses. For many business owners, this sounds like a great deal, but there is a catch. If you or any employees use that car for personal reasons, you have to account for what is called a private share. This private share is essentially a non-cash benefit and it needs to be reported as part of your salary. That means social security contributions and taxes will apply. And don't forget about VAT. Every time you use the car for personal reasons, that percentage has to be reported and calculated for tax purposes. This can be calculated either through the flat rate method of 0.9% of the purchase price of the car per month, or by keeping a detailed logbook of your trips where the private share is 0.70 Swiss franc per kilometer driven for private use. So if you don't mind a bit of paperwork and you use your car mostly for business purposes, this might be a great tax saving opportunity. Now, what if you decide to keep your car in personal ownership? You can still use it for business, and here's where the benefits really kick in. Now, instead of transferring ownership, you can simply track your business mileage and be reimbursed by your own company. In Switzerland, the standard rate for this is 0.70 Swiss franc per kilometer, and that reimbursement is tax-free for both you and your company. This can be especially beneficial if you frequently drive for work. The reimbursement often even exceeds the cost for operating the vehicle, especially when you drive a fuel-efficient car. However, keep in mind that your commute from home to your office is not considered business use, so those kilometers won't count towards your reimbursement. If you primarily use your car for business, transferring it into your company may be the most logical choice. You'll get the tax deductions on maintenance and fuel, and even though you have to report the private share as part of your salary, the benefits can outweigh the extra reporting effort. If you mostly use your car personally, it simply makes sense to keep your car in your own name and just claim your tax-free reimbursements for your business mileage. If you frequently travel long distances for work, it can actually be more financially advantageous to keep the vehicle privately owned. This is because the 0.70 Swiss franc per kilometer reimbursement is often higher than the actual cost of travel, effectively increasing your tax-free remuneration. Now, if you're either a sole proprietor or a self-employed person, things work a little differently. Since there is no legal separation between you and your business, your car is always legally owned by you. However, for tax and accounting purposes, you still need to specify whether it's primarily a business or private vehicle. The distinction is simply based on how much you use the vehicle for work. Here's the key. If you use your car for business more than 50% of the time, it must be treated as a business asset in the books of your sole proprietorship, and you need to calculate the private use portion for tax purposes. This means you can still deduct business expenses like fuel and maintenance, but you'll also have to account for personal use in the same way as you do in an LLC or in a corporation. If the car is used less than 50% for business, it remains a private asset, and you need to account for the reimbursement of business mileage instead. Clearly, deciding whether to transfer your car into your business or keeping it in personal ownership is not so clear-cut. It depends on several factors. Making the right decision can have a big impact on your tax structure. So it's important to evaluate your specific situation carefully. That's where we come in. Here at Nexova, we specialize in helping business owners like you navigate these tricky choices. And we're offering a free consultation to help you decide which option is best for your business. So, click the link below and schedule your free consultation today. Thank you for watching. And as always, if you found this video helpful, don't forget to like, subscribe and leave a comment. See you in the next video.